This is the last webinar ever for 2023. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. And I didn't mean to scare you. It's not the last Elite webinar ever, just the last one for this year because it's done. There is no more trading days this year, and it has been a wild ride to say the least. Wouldn't you agree, Riz?
Yes, it's been eventful. In many ways, it's been volatile, but in fact, I think it's worked out like no one expected. I think this is one of those years where everyone was calling for some extreme to occur in the market, either go to the moon and massive bull run, or just have another crash. So there was next to no nuance this year in the financial. I guess all the financial media and really every pocket of finance, whether it's on social media, uh, news, you name it. So it's been one of those years where for me, obviously, I'm grateful. It's been a solid year, and of course for elite members as well. But I know a lot of people that felt like, whoa. We didn't expect this end of the year rally, at least
Mm-hmm.
not this extent. And then we didn't expect the kind of like this consolidation for quite a bit of the year. If you could see, if you go to 2023, just year to date, you'll see that there's points where we had a lot of sideways action for months. Now, this may not look like a big deal, but it's actually a couple months there. You got the top back in July, the previous high, I should say, which was broken very strongly uh, this month, and then you had a downwards trend. So a lot of people were like, "All right, this is it. We're finally going lower." And then the Fed just juiced the market, right?
Yep.
A bunch of uh, like I would say I would say inverse narratives they're going on where the Fed once said, okay, we don't plan on decreasing rates anytime soon. And then in the next meeting they're like, yeah, we foresee some rate cuts. So like the market, because it's so hung up on interest rates and inflation the past 2 years, well, it's a no-brainer that juiced the market, right? When you have Powell coming in and saying, well, yeah, we're looking to cut rates. That was one of the biggest, I think, determinators of this run from November onwards, right? So very, very unexpected in the velocity. Honestly, it's insane. And I'm going to get into how I'm positioning in the new year. Some of you will already know, some of you will be a bit surprised. And it'll be fun to see how it plays out, especially with my neck on the line.
Yeah.
And my money as well.
Yep.
But it's good. I'd have it no other way. Like I say, skin in the game is important, and I think it's mandatory in this line of work. Not easy, but mandatory nonetheless. And what's interesting is last touch point on the broader market here. Uh, RSI continues to be a little bit still high, even though it's pulled back a little bit from the early December. In the end here, it's just kind of just the slopes down a little bit, simply not because the market's dropped, but the market's just kind of like consolidated or so, or just kind of moved sideways the last three trading days. That's why it's kind of slowed down in terms of the velocity on the RSI. But other than that, uh, market remains overbought, overextended, overvalued. You name it, it's in there. Extreme greed. Uh, Lot of money inflows coming in from the institutional side. I can say we've had we look at a lot of money flow coming into the indexes, into the market. But with that said, there's a lot of money on the sidelines as well. And we're not talking millions or billions, we're talking trillion plus in money market funds. So money market funds is just cash, relatively speaking. So interesting times ahead where we have the economy cracking along, and the average person on the ground, and I'm saying from North America, is feeling the pinch, but consumerism is going crazy. Spending is still extremely high. It's like this kind of market where it makes no sense, an economy that makes no sense. So you have Both, really, really being, I would say, unpredictable and against the norm. And what does that mean for 2024? Well, I'm going to sh tell you shortly.
No, it's a very good point. It has been a very interesting year, especially dealing with the Fed and their, attempts to curb inflation. That was obviously the big, you know, modus for increasing interest rates. They had to get that under control. And now, the market is saying, "Oh yeah, this is great. Everything's great." While, most of us are definitely still feeling the pinch, as you said. I think I heard someone talking about earlier, whereas like, during, the events of 2020, the unmentionable events of 2020, credit card debt went down quite a bit. Now it's all pretty much back. So, really kind of talking about what you're saying, Riz, where, spending is just like out of control. People are just, kind of going nuts out there, and the market is going kind of crazy with it.
Yeah, and we've touched on this before. I mean, week after week, we provide a lot of insights, not just from a market standpoint, but from the economic standpoint, consumer sentiment, consumer spending, all the ma macro and micro data. And it's no surprise that we've been saying that, look, the post 2020, the consumer was very strong because of a massive amount of not only money given out, primarily in Canada specifically, but from the standpoint that they were not able to spend even if they wanted to. Like people wanted to go drinking to a bar, they couldn't. It was closed, locked
Yep.
down. They wanted to fly, nope, can't do, can't get to the airport, can't get on a flight, wherever. You want to go to the movies, can't go to the movies. Movies, no, no way, Jose. You
Yep.
wanna eat sometimes even in the early days, if you want to go over to some friend's house, nope, can't do that either, right?
Yeah.
So want to drive somewhere, where are you gonna go? Everything's closed,
No
so
kidding.
so it's honestly one of those things that hasn't happened in a century. Early days, I said the last time we had a situation like this, the world was very different 100 years
Oh yeah.
ago, and that's when the last, I would say, pandemic, it was there, and it's a once in a century kind of thing. If we look back, which is I find to be fascinating, but that's another story altogether. But that really, really bolstered people's savings. Right. And I know we got to go to the next part, but I think it's important to add that bolsters everyone's savings. Why? Because they're spending less. Even if they want to spend, they couldn't.
Yep.
And man, that carried over into 2021, obviously. Very overheated, very strong market, the massive, crazy amount of retail uh, money being pumped in the market. Obviously, we saw the GME, GameStop, AMC, Bed Bath and Beyond fiascos, all that stuff that was like 2021. And then 2022, uh, you time to pay the piper, right? Just
Yep.
the bill came due, and then everyone was just depressed in the slump. It was a good year for me again. Again, I'm not saying to boast or anything, but this year marked the 11th year where I've beaten the markets consecutively. So I like to think maybe I know what I'm doing a little bit. There might be some people that disagree, but I think I think I have a handle on things. I think so. Fingers crossed. Next year is my 12th year destroying the market, conquering the markets, as I say. But we'll see. I don't want to jump the gun and jinx myself. But really, coming back to things, I think consumer demand is very strong, surprisingly so. I'll be honest, I did not expect it to be this strong continuously, even after. Remember, there was musings like, okay, well, student loan and student debt
Yep.
payments have restarted. Remember, it was like
Mhm.
October. Oh boy, this is going to impact. And it has a little bit. We see little pockets of unaffordability and less spending. But, and yeah, maybe that, like Chris pointed out right there with his cursor, maybe it trickled into the market a little bit. But I don't even think that was pertaining to that. But man, if you I think like Black Friday numbers, whatever, Cyber Monday numbers, and then Boxing Day numbers now is going to be through the roof, I think, surprisingly so. And then when we head into January, we're going to see the full year Q4 and full year uh, uh, results for most companies. All right, so that will be interesting to see.
It definitely will. That's something we're going to be keeping an eye on. Let's take a look here at the breakdown for the S&P 500 for the year and see who the big winners are. And well, if you've been watching our elite webinars for any amount of time, you should already know the answer to this. It's tech, communications, and consumer discretionary, just blowing everything out of the water, far surpassing the S&P 500 itself by over about 15 plus percent at the lowest for consumer discretionary. While communications and tech are over doubling. Math on stream is hard, but I think I got that one. Basically over double the gains on the S&P 500. So they're definitely carrying the torch into 2024. So we're gonna have to keep an eye on that if they can continue to hold those gains. Coming in towards the end here, we saw a really big run here in financials and real estate, really making a nice recovery, having been below the zero line for quite some time, or just hugging right around it for most of the year. But still, healthcare, energy, consumer staples, and utilities are underperforming for the most part. Definitely underperforming the S&P 500, but a couple of them, healthcare and energy just holding the zero line here, while staples and utilities are pretty beat down. Man, it was a heck of a year for tech, Riz.
Yes, you're just driven predominantly by uh obviously the narrative that the economy is recovering, with the narrative that we have no hard landing, meaning no recession, with the narrative that we have rate cuts. Remember, there was even talk of like multiple rate cuts in the by the end of the year.
Oh yeah,
Ding ding ding, we're at the end of the year, no rate cuts, guys. Surprisingly, actually, no, not surprisingly.
yeah, not at all.
I, that was tongue in cheek, because we said it all along. Chris, you and I obviously have been a vocal proponent of this. I know others have been too, but specifically to Elite and the webinar, we've been saying all year long, nah, the market's got this one wrong. And I think that's what we saw the pullback back in July, August, and then even October, right? The drop where markets were like, okay, no, no cuts this Q4. Okay, okay, maybe
We didn't
2024,
know
that's
about
fine.
that. Yeah.
I know, right? Like, whoa, duh. Right? It's like, wow, whoa, where'd that come from? I mean, could only see it from a fucking mile away. But hey, anyways, 2024, I think it's gonna be something similar. I'm gonna crack into that later, but I feel like it's been a tremendous year, obviously, for those that were predominantly long and predominantly long tech. Obviously, right? Take a victory lap, pat yourself on the back. Great job, well done. Next year, though, oh boy. Don't take this as gospel. This is not me trying to predict the future or tell the future with any level of 100% certainty, but historically, and in my 16 years of experience, fuck, that makes me feel old. When people say they've been doing something for 16 years, they're usually fucking 50 or something.
It's
Um,
true.
but I mean, I'm an old I'm an old fart, anyways. But I feel like in my 16 years, every time I see a sector do something like what tech has done, communications, tech, very similar. Usually that's not the case. They're not the leader the following year. Case in point, and we don't even need to go back, Chris, but we can tell last year, what happened with last year, oil prices, energy through the roof was the leader. We're like, holy crap, energy is the leader, just crazy. Was that the case this year? Nope. Nope, not even close. Underperforming, consolidating, and if you were like this energy train's going to roll into and through 2023, and we're going to see oil at 120, and we're going to see oil stocks continue to go to the moon, you have to accept that you were wrong, right? And that's fine. And I feel like same way. If you think tech is going to continue to go higher and higher and higher and lead this, sure, I'm not, you could be right, but I would take the odds. I would take the odds. And really that's what it comes down to. Probabilities, risk management, and I would take those odds. So am I going to go out and short all of tech, the tech sector? No. But it's overdone. I'm not bullish on most sectors at all, which will lead me into the next part of the um webinar. Chris, you can take this part away.
Yeah, let's go ahead and jump into that here and take a look at the asset classes. And as Riz was talking about, oil is really just kind of in a slump, well below this 76 support resistance line that we had seen in the past. We had a very nice touch here coming in right on the day after Christmas, Boxing Day. We got right there and had a hard rejection towards the end of the week. So oil definitely down. I'm seeing that in the pumps personally. It's definitely lower than it has been in quite some time, but man, gold has been on an absolute tear here. Made a new all-time high this week. Looks like on the 27th on Wednesday, we made a new all-time high for gold. So $2,077 per ounce. Did have a bit of a rejection after we hit that all-time high, which isn't uncommon. But we'll have to see what gold is doing here. But yeah, oil really in a slump, and it has been for quite some time.
Yes, thanks for that recap there. That's good. Chris, like you said even the last time, $70, right? Oil,
Yep,
70 bucks, 70 bucks, like just kind of floating
hanging.
around there. You know, nearly almost half of that 120 projection that people were making, pretty much at this all year.
Yeah,
And the good thing is it's been a driver of decreasing oil prices, obviously at the gas prices, sorry, at the pump. It's been obviously a driver in cooling inflation, right? We knew 2022, one of the largest constituents or the factors in higher inflation was prices at the pump, gas prices, which is of course derived um, in part by prices per barrel. And then we have commodity like gold hitting all-time highs really on its crazy which was not expected. That tells you something that it's something going on in terms of mostly when we see gold moving, it's not retail, it's mostly again, it's almost all of it is mostly institutions, but especially when it comes to gold spot futures and gold spot related ETFs, it's mostly institutions, usually trying to hedge their books and hedge their risk, and that worked out for them actually this year. If you really think about it, from 2023 to now, gold's actually moved steadily higher, which isn't always the case. We've seen in the past that it's kind of just consolidated, stagnated, underperformed, not really worked as a hedge. But this year it's done decent alongside the market also rallying, right? Which usually doesn't happen historically. Back in my day, we would see an inverse correlation, right? Where if gold went up or markets went up, gold went down. If gold were going, was going higher, we usually saw markets trend lower, right? So we saw the inverse correlation back in the day. This time positive correlation, meaning we see both of them go up this year, right? So it'll be interesting to see how that happens and how that goes in 2024. And do they decouple? Do they start going back to their regular relationship of being opposites?
yeah, that'll definitely be something interesting to see here. It looks like we're going to end up about plus 12% on gold on the year, so that's pretty impressive for gold. Like you said, usually not as volatile, but definitely making the move this year. All right, let's take a look here at the bond yields and the strength of the dollar. Now, the bonds continue to slide here. As we've talked about before, they are factoring in, rate cuts. That's basically what it is. They're forward looking. They're saying, hearing the Fed say, cutting rates. So bond yields are starting to come down, and the dollar is starting to come down too. We did not hit our low here that we had in July, but we're definitely getting closer. We've definitely been on a bit of a downtrend here on the strength of the dollar going into the close of the year. But still, dollar remaining pretty strong and hasn't been replaced as the world reserve currency just yet.
Yeah, we spoke about that in Elite actually just roughly in the chat today, where you know what, surprisingly, U.S. dollar is resilient, and I just said even before getting on the webinar in the chat, I said. Look, if we do see an economic downturn in 2024, meaning we do see a recession or an economic slowdown, or even worse, maybe a heavy recession. Again, I'm not saying that's going to be the case, but if, okay, theoretically, what's that gonna mean for the rest of the world? I could much say that it's going to impact the rest of the world negatively as well, meaning their economies are going to slow down. It's going to have like a trickle on effect for trickle down effect on different economies. In fact, we've already seen that Germany, I think France even, I think Netherlands, both in consecutive negative GDPs, which is the classical definition of recession, right? So we do have a couple of economies in Europe already uh, posting signs of a recession. So if it does happen in the big daddy of them all, the US, uh, well, it's going to have a negative impact on other economies. And as a result, anytime we see something like this happen, global macro weakness in economies, what that means is that usually bolsters and strengthens the US dollar. Why? Because if you got Turkey's, you know,
They got
lira, you got the
hyperinflation.
yeah, you got the Turkish lira getting decimated, or you have the euro not going anywhere because the European economy is in shambles. You think people are gonna flock to the, you know, Zimbabwean currency, or are they gonna go into the sorry, sorry, Chris. Every time I see you crack up, it cracks me up too. Are we gonna see, Nicaraguan currency, whatever it is, like, be the reserve, or people start transacting in that? I don't fucking think so. I think the default is gonna always be, and I may it be so, I think I might be getting a bit too patriotic for not even being American, or may it always be so the American dollar, because you know, that's what we signify as the reserve, the default. What are you gonna do? Deal with the Chinese currency or the Japanese currency, which has gone nowhere, and they have negative interest rates? No, it's not happening. It's not gonna happen. What are you gonna do? You deal with the Russian ruble? Like, come on, like, like. That just fucking blows my mind. I wish I could bet against every one of those people individually. Would have made even more fucking money. But hey,
Sadly, no shares to short on naysayers around here.
yeah,
So, all right, well, let's get into it because I know everybody wants to hear, your predictions for 2024 and kind of what your outlook is going to be. While Riz is giving that, if you want to throw your questions in the chat for all of our people who are here live, that would be great. Obviously, there's a lot of anticipation because there's going to be a lot of catalysts this year. Especially in the U.S., revolving around, the election we have coming this year. That's going to be a pretty hot button topic, all of the conflict going on everywhere.
yeah,
It seems like now, it seems like there's a new conflict every week almost.
yeah.
These are obviously going to be some pretty big catalysts. So, Riz, what are your thoughts for 2024?
Yes, 2024, I can clearly say is going to be an even more. This year was volatile, but it was
Yeah,
filled with consolidation, uncertainty, a lot of like gyrations where you didn't really have any clear direction. Obviously, no November onwards, it was a clear direction, aka
sure.
up. But other than that, it wasn't as easy. In hindsight, it looks like, oh, it's an uptrend, but it wasn't that clear when you're in it. 2024. Big difference. Okay, big difference. Again, you can hold me to account, a year down the line. But I feel like we will see an economy that slows down. Uh, I have to look at the moving barometer, which is micro and macro data that comes out every week, every month. But I'm confident in saying that we should see a slowdown. I think we will see our rate cuts, obviously, next year. I don't think that's a surprise, but the level of rate cuts we see is what's going to surprise people. I don't think we're going to see as big of cuts as people think, unless the economy weakens to such a point that they are forced to. And then that brings us to a point where anytime the Fed cuts rates at a accelerated velocity, the market pukes. It absolutely dumps. Now, I'm not going to say it crashes because that's not the case. It pulls back, it pukes, it drops. Okay. Those are the words you want to use. And that could be the case. So it's kind of that scenario where screwed if you do, screwed if you don't. So if they cut rates slower than anticipated, the market's gonna be like, whoa, what? We were pricing in, you know, 1% or a
Hmm.
percent and a half, but we only got 0.5% so far and we're halfway in the year. No, this is not good for growth. And it's gonna drop a little bit. But if they cut a percent and a half, maybe they do it so fast because that's the Fed signaling that the economy is slowing down faster than they anticipated.
Freak out.
Boom. You're in trouble again. The
Yep.
market's going to price in the fact that the economy is slowing down. We might be having a hard landing. It might not be that soft landing scenario that everyone's been anticipating. And then you're going to see a bigger pullback. So those are the two scenarios you want to keep in mind. Okay. Um, I hope I've made it as clear as possible. I apologize if it's a little bit convoluted, but I hope it's as clear as possible in terms of what the two scenarios are. Either we see rate cuts at a significant velocity, and then that spells, you know, bad. That's bad news for the economy and then potentially markets. Or we see a slower rate cut environment, slower than anticipated. Then that's not ideal too, because that means the market's like, whoa, this is maybe stifling growth. Right. So those are the two narratives you want to keep in mind. Again, it's going to continue to move. You're going to see a lot of headlines. You're going to see a lot of yapping and talking from talking heads on social media, on news media, financial and otherwise. You're going to see anyone and everyone interjecting with their take because opinions are easy to come by and everyone has one. So remember, opinions are easy to come by, but experience is earned. Track record, pedigree is earned. And I have to earn that every fucking day, right? And it's been the case for 16 years I've been doing it, but obviously the last 10 plus years more recently is what I've been doing it for more in a public eye, right? So it's going to be interesting, and I can, say what everyone's been waiting for is I am squarely bearish. Bearish. Okay, so I'm not gonna mince words. I'm not gonna make it vague. I'm bearish. I'm leading bearish. Does that mean I'm going out and short in the market? I have a little bit of a small short, but nothing substantial. Uh, but I'm not going and fighting this. I'm not fighting this train just yet. I'm looking for a little bit more of a weakness, and then boom, I'm gonna come in, swoop in for the kill. Okay. Am I going out and buying different sectors and different stocks? I see not really. We have a couple core positions open in Elite, as Elite members know. But I'm predominantly cash, have been, and I could say about 85% cash, as Elite members know. So that's a sizable amount, right? And along with my other strategies and options, I can generate income, I can generate a return without having to be exposed directly to the market. And I can say it's been a tremendous year using my strategies, using what I do, and have been doing for all these years with alongside Elite, and I could say it's been about 70% year-to-date return, which I shared on social media. And I've shared videos, I've shared screenshots, you name it, account values of my year so far and throughout the year. So it's been a journey. I hope you've been following along. Hope you've enjoyed it. Hope you've enjoyed the transparency. I haven't been right on everything, but I think more often than not, it usually pans out. I'm not a fortune teller, but I guess some degree of having your finger on the pulse of the markets, as I say, is something that I've developed and honed my craft on. And so yeah, it's squarely bearish. Again, I will say disclaimer, caveat, you don't need to agree with me. You don't need to simply do exactly what I say or do. Again, this is not advice in that sense. I'm just being transparent and sharing my views. And of course, I come to that based on years of experience and data and intuition and everything. So hopefully that's, I think, what people were looking for, Chris. I think in terms of direction, my views
Oh yeah.
into 2024. I hope that's significant. I know I've said a lot, but simply put, I think 2024 is going to be the year where we see a lot happening. And you mentioned on a big one, which with elections, I think there's a lot of uncertainty around that. I don't know if they're gonna do something. I'm not gonna put tinfoil hat on, but I don't know if they're gonna do something. Chris, you and I talk about this and the team where
Oh
if
yeah.
they're gonna do something to, I have to be careful with my words, but like to prop up or to keep the market
Hi.
stabilized, elevated, maybe, wink, wink, nudge, nudge, kind of give the Fed a little bit of a, you know, you know, come on, old Powell, you know what
Yeah,
you gotta
let's
do.
just keep those rates coming down. All right. Let's keep them
Yeah,
where they are. Let's keep this market
yeah,
going. Yeah,
yeah.
I hear you. I'm
Let's
picking up
keep
what you're putting down.
Yeah, and I can't say that's gonna happen
It's
because
possible.
it's possible. And again, I'm not saying it because of a specific political alignment. I'm being very, very unbiased when I say this. It would My response here, I assure you, would be the same. What I'm saying, regardless of who or what party the sitting president or presidential candidate or administration would be, period. Okay. I've seen many presidents come and go in my trading career. I mean, I'm not that fucking old, but okay, still. So it's always like this. So regardless of political
Oh yeah.
affiliation, so keep that in mind, guys. And again, not to get too tinfoil hat on you, but we do know election years are bullish years, relatively speaking, all things equal. Again, assuming with the backdrop of a strong economy and rates are low and all that stuff, which isn't really the case with, everything isn't going to come into play. But generally speaking, just looking at things solely from in a vacuum, where election years, just on that alone, markets are usually bullish. Okay. But when you start mixing in and adding the other ingredients, like, okay, maybe slower in job growth, maybe unemployment's a little bit higher from the bottom. You have rates that haven't been this high since 2007. You got an affordability crisis. You got some major geopolitical rifts and wars. You've got unchecked economic, or I should say, unchecked fiscal spending, unchecked debt, on a country level. You've got all these things, so it's not they can come into play even in an election year on the downside. So it'll be very interesting to see. But without mincing words, I'm leaning bearish. If that changes, maybe it changes. 3 months in, 6 months in, something happens, or maybe we get a pullback, Chris, for example, to like 4,700. I'm like, all right, it's not going to be a straight line down. It's not
Yeah,
going
of
to be a
course.
straight line down. Maybe we take some bullish trades. We're going to do that. We're going to be malleable. So I'm not like a perma bear or perma bull. That's some complete bullshit way of operating. But I will take those opportunities. But generally speaking, if we see something come down to like the market come down to 4,600, that's a key support if it does come down there, right? The previous July highs, 4,600 is going to be that support. Um, Maybe that's a potential little buying opportunity if we see that. If we break through it, well, lo and behold, we might see, 4,500, what is that, the 200-day or 50-day moving average, and a break below that, we might see 4,300, 4,400. It's going to be those kinds of things, and you want to look at it that way. You don't want to set yourself up to say to the moon or crash. You want to be more granular and nuanced. All right. So, that's my take so far when it comes to 2024.
No, I have to agree with you on that, Riz. Yeah, I kind of feel that it's looking more and more bearish, by the day, if you ask me. But yeah, the this move is just insane, if you ask me. From even just from back here, towards the end of October, this rally is just nuts. It's like, as you like to call it, a face ripping rally.
Yeah.
And there's got to be some pullback. And like you said, it's not going to be like a straight drop. That there's not going to be people jumping off the buildings in Wall
Yeah.
Street
Yeah.
and stuff like that. That's for the movies. This is not real life. It can be a general downtrend, but there are going to be periods of up and down, and that's the important thing to remember. Because if you were buying in here in July thinking it's going to the moon, you would have been feeling pretty bad, in the end of October before the rally happened. So
Yep.
it's one of those things, like you said, you have to stay malleable. You can't just go all in short or all in long. You got to play the market, how it's behaving.
Perfect. Perfect. I couldn't have said it better myself. I agree on all counts. Fantastic. And you're right. It's nuanced. We got to take it. And that's what we were doing as traders, right? If someone completely entered the market, went all in, bought everything with all their cash back in July. And then right now they were in for quite a bit of a wild ride the last 6, 7 months, right? They went from probably losing like what was it? I think Chris from July highs. You see a pullback all the way to October. Sorry, yeah, October lows. What is that? Like yeah, you see like a 10% drop in your holdings in your account just by buying and holding like and that's
Not a fun
tough to
day.
swallow, right? And that's in 6 months, right? That's quite a bit. So this is the beauty of trading. I don't want to just say just actively, but trading strategically. It allows us to take advantage of both sides. It allows us to be defensive when we need to. It allows us to be aggressive when we need to. It allows us to take on risk and turn off risk. That's what I love about this. And so far, it has served me well, and same with their students, with elite members. It has served us well, so we'll continue on this path. In 2024, for elite members, I can say the goal isn't just to help you in terms of markets. I think if there's a key overall, I would say, theme for 2024 when it comes to elite, the elite membership, it's not obviously you want to help grow your wealth, help you master trading, all that, but I think there's going to be more in terms of not, I don't want to say pivot, but I want to say uh, an addition of making sure you're able to not only master markets, but master your money in terms of external to market, in terms of how you spend it, how you approach it, how you see money as a whole, how you talk about it. You know, uh, these are all things that we're also going to start focusing on in Elite. So it's exciting times, exciting days to head. Um, you know, market or otherwise, it's a lot of new and great things coming for Elite members in 2024.
No, I think that's really important, because the way you approach money is so critical, for your success, not just in the market, but in life. And so, Kind of closing out the year here, I'll give my final thoughts, and then Riz, you can close us out. But obviously, just want to thank all of our subscribers, especially all of our elite members. You guys are awesome. This is why we're doing this. It's all for you guys. We want to help you succeed. Like Riz was talking about, not just in the markets, but in life as well. And I just want to, thank everybody who comes out to these webinars or who watches them on the replay, who leaves a like and a comment. And if you think Riz is completely wrong, please feel free to leave a comment down below and let us know how Riz is completely wrong about everything. But I think his win rate stands for itself. And just again, want to thank everybody for being part of this journey. And 2024 looks to be an interesting one, to say the least. So,
Uh,
Riz, I'll pass it off for you for the final comments of 2023.
Absolutely. Absolutely. Yes. Thank you, Chris. I appreciate it. Again, also big thank you to you. Tremendous appreciation and thanks to you for doing this, being dedicated, obviously, being a crucial aspect of what we do here at Riz International and of course Elite. It's been an honor. It's been an honor. I don't say that lightly. It's been an honor to have you along with us, as a partner together. Doing this. I know there's a whole team as well, but especially from the early days with you, it's been I never would have thought, right? And that's what life has taught me that
Sure.
you, it's unbelievable. It's unbelievable. I can't, I may be able to, predict markets with some level of reasonability, but with life, oh man,
Yeah.
it always throws me in for a loop, right? But it's been tremendous. It's been an honor. I love what I do. I'm very fortunate. It obviously, I hope my passion and commitment for it speaks for itself. And I will continue that in 2024. And, I wish everyone a great rest of the year and a prosperous, happy, healthy 2024. I hope you are able to, whatever your goals are, whatever your aspirations are, it doesn't matter. I hope you're able to achieve them in good health and spirits. And, I'll be there and the team will be there for you, for those of you in Elite. And for those of you not in Elite, you'll have the chance to join. You can find a link to join in the comments, sorry, in the description to get on the wait list. We will be opening in January, and this will be your chance to take full advantage and be a part of a community that's like nothing else. And I genuinely mean that.
100%. Can't wait to see it. And like Riz is saying, if you want to get in on this, best to do it on the ground floor. Do it in January when Riz opens it up. Make sure you click that link in the description. And you know what? We'll see you in 2024. Thank you, everybody.